Good evening. This is the Elliott Wave Daily Update for the S&P 500 and the NASDAQ 100 for Thursday, July the 25th, 2024. An interesting day in several ways today, in that the market initially did head lower, put in a new low for the sequence, and then rallied, at least on a 2 and a 5 and a 15-minute chart, very strongly. And from going down, being down over 300 early in the session, to being up about 150, probably more, later in the session, and then closing back down at the lows. So it was an interesting turn. And what it caused me to do is to go in, and I'm going to start here on the S&P 500 on the ES. I'm on the hourly chart. Is basically I went inside what is continuing to be counted as the minuet fifth wave, and just actually labeled it out. And as it turns, as I thought this might have been 3, and then we had a 4 and then a 5, it ends up that it was that, but it was inside 3, a small 4, and a diagonal 5th to put in this sub-minuet wave 3. So again, it gets extended. So as it did to the upside, now that the positions that were actually being put on, creating the atmosphere to push the market higher and higher and higher, and extending and extending and extending, is now the same positions that started to get put back on, but then they get taken off as the market breaks below levels that should be support, to support the positions that are being put on, but also just to kind of like put a floor into the market. Well, those keep giving way. And so, as I've been reading, and some great coverage by Spot Gamma, actually, and I recommend Spot Gamma. And if you're an options trader, definitively you should be reading their information. And if you're just doing analysis on the market and you want to understand why it's doing what it's doing, again, it's trading the numbers and it's algorithmically controlled, etc. So it's just a really good source of information as to what's happening behind the scenes when it comes to the flow, money flow, the options flow, what's happening, where are things ending up and lining up. So in other words, when we're doing the dispersion trade and then moving into calls, tons of calls and selling puts, that's a strategy. That's just, but it's self-fulfilling in a way, because the market does tend to just go up, because the dealers are the ones selling the calls. The dealer are the ones buying the puts. So what happens is, well, they got to hedge it. That's called buying the underlying. When that gets reversed and you start to see like volatility, this morning they started to sell it. And so the market stopped. When it was time to turn, you could see what they were doing. So in any case, what happens to the Elliott is that we have to get an extension in there. And this one is inside the fifth wave. We get them very often inside the third wave. Sometimes they come within the fifth wave, and this one is in the fifth wave. And again, the market is safe, and that wave 3 is not the shortest wave. Wave 1 is. So we still are in the boundaries of not breaking any rules on an Elliott basis. So this extension, as powerful as it is, you can equate it to what happens when they go up, when they were going up, and they would break resistance and they would smash through resistance. And because we were basically in uncharted water up there, they would just free fall, free rise, except just kind of do a little bit of explosion, because there was greater numbers needing to be taken or gotten, and the prices just go, because there's very little that are going to say and say, well, I'll offer it out here. Well, I'll give some at that level, because someone is getting short, or filling it. They got long and they're just getting out, and so it'll just continue to trade higher until we get the reversal, and then again, we did. Now we're getting that same thing, but it's heading in the other direction. That's my whole point here right now. Sorry that it's kind of elongated. So I went through, I did the internal, and it is an extended third. So the third of the fifth. So within the third of the third of the fifth, that's what extended. So here we have it, the 3, the 4. Now, if we're coming down in a 5, I've just done the same exercise in terms of we're connecting wave 1, which was not that great, not that big, wave 1, putting it over here to the top of wave 4 to get additional fibs going down. Well, you'll notice where it stopped. And in actuality, because this is, if we're looking at a candlestick, yep, real prices really go down, really went down there, and it did trade at 54.32.50. But there was nothing else there, and it just kind of shot back up. So the body of the candle, so it becomes a tail. And so that's this kind of, you would say, was a trap. Trapped a lot of sellers down there, and then they just got whipped. But and so coming back down, the body of the candle is inside the wick, which is very suggestive that new lows will come in. Because again, if I look at this on a line chart, you see the difference. Now this came down to here, but the close of that bar was way up here. So that's what I'm speaking of. So again, we're looking for, it is already making the new lows, and it comes right at 2.618. If it were to end here, it would be what, a failure of a 1.5. If it were to end there, and that's a big if, because I do believe it does appear that we're going to need additional. So with that in mind, I would again look for a new low below 54.3250 or 54.3350. And the next fib level is 3.618. Again, because that was small, but when you're moving up in the scale, you're just continuing to add. So it's still 2.6, 1.618, 2.618, 3.618, 4.236, 4.618. As it continues to grow, you can use the variations, the multiplication of the lower fibs, and what do they turn into. So roughly, I don't normally go way above 4.236 before I do a really close look at something else. So using that, our support levels now for continued follow through would be 54.05. Now, going back to the conversation about once that put wall got broken at 5,500 and they kind of put that free flooding in, and it produced a very large drop, 2.6% drop yesterday in the S&P. And I guess it has been quite some time since the last 2.6 or over 2% move in the S&P. Now, it opens a lot of doors to start to just put in more slide, so to speak, because you'll notice that once we were done, it disappeared. That's what the market did. So we're talking about that it topped at 55.33.25. So it got itself back above 5,500, which was good for rebuilding some of that internal stuff that could keep the market rallying. But it did not. So because we're still sitting in an area where 55 got broken substantially. And again, today, we'd already dropped down to 54.32. And we rallied back up, getting back above 5,500. So you begin to get the feeling, okay, they're gonna pull it together and we're gonna rally, but it would be a B wave. Now, if you understand the characteristics of a B wave, a sucker play, so to speak, it just, it gives the impression it's just gonna go and it's gonna run and it's not gonna stop. Happy days are here again type stuff. And then stops on a dime. And then the downside is slide-like. So 55.32 or 55.33 on the upside, and got down to a low at 54.33. 55.33 to 54.33. That's 100 points. That's what it did starting at 1 o'clock. So between 1 and 4, actually more, it dropped 100 points. So that's a good slide. Now, I think we could get more. Now, remember that if we continue to break down, I believe the put wall got shifted down to 5,300. So they're really kind of moving it out of the way. But the market could remain weak. The market could remain in the danger zone. So that danger zone is that we run out of support and we can have a quick drop down to 5,000. So if I just kind of, let's go out to the 4-hour chart, we're talking about coming down to here. Now, what would that be? That is 0.382, the normal pullback that I'd look for a minor fourth wave. That is the fourth wave of one lesser degree. Well, we not just got our first indication that it might, how it could get there. So first we were talking about the strength of the support at 5,500. Well, it got blown through. Now support at 5,400 or 5,300. I believe it can get tested. And we'll see just how strong it is. All in the context of the market adjusting, the market coming in on a minor 4 correction. How it gets there, it's like it could seem very intense, and it would actually speed it up. Still leaving like all kinds of like this gets done, and we really do then just rally in minor wave 5. If they can just lickety split finish up this. But unfortunately, even if I come down to the 1-hour chart, let me not get ahead of myself, because we would still be in the process of putting in the A wave. So the A wave could take us down, peak our nose below 5,400, catch the bid, and actually produce that B wave. But and so a lot will come off tomorrow. Tomorrow, again, a Friday expiration. And so we have a lot, all of the stocks, ETFs, indices have an expiration tomorrow. Now, I'm not sure even how large that's supposed to be coming in, because the next larger one would be August, and August is not going to be as large as September is sitting waiting to be. But this changes because, again, the positions build, the positions decrease, the positions are closed. So again, exactly how much got released today, yet to be determined. So we'll get all of those numbers again in the morning or shortly, because an afternoon report does get sent out. Now, in the meantime, what am I leaving open? I'm definitely leaving open the potential that the market has additional downside. We're in an area where it could complete, but if we're going to play it clean, it needs to get below 54.3250. Put in the new low. It's really okay. And then, but our next line in the sand, so to speak, is 5,400 to 5,405, 5,406, right in there. And if it breaks, it could be real quick, a drift straight to 53.83, 53.84, done and run. Now, you may be asking, what is that blue line? What is that yellow line? Those are the anchored VWAP. I've heard a lot about it, so now I'm using them, and they really do draw in as magnets, so to speak. So to me, they almost are, and I don't hate to say this, resembling the shift in the put wall and the shift in the call wall. Right? But I think the call wall is still up pretty high. But then again, the anchored VWAP is the average or the value weighted average price. Volume value. Wow. Volume weighted average price. So the number, the volume and what traded all these levels produce this price. And now this is, as we continue to move down, produces the price. And so the anchored VWAP is dropping. So again, to really get, it could produce some heavier selling, because it produces an anchor. That's where they'll gear up. And it just happens to be sitting right at a support level, a fib support level. So there's a couple of things that line up that say, yep, it could go there. But our next line of defense is basically right where we are. So like 54.30. A break should make it pretty quick down to 54.06 to 5400. A break there gets it to a little bit more serious. So, but I can say that 53.83 or 84 does not take care of it, on the fact that, well, on the way down, it's just got intense, pushed through, and then comes back. Sort of like that. But again, it did what I'd be looking for to get a turn. And as a day trader, there were plenty of things to go, yep, thank you, yep, thank you, and make decent P&L. So, and again, on that downside, same deal. When it went, it just went. So, moving averages. 200 is turned. That's VWAP. Here's the 50. So got up, broke above the 50, broke above, and then couldn't hold it and came. And then when it went through, it just went through. So what do we have below it? We have the 20 and the 13, both peak, spike, and turn sharply lower. So I'm going to be looking for that to finish up. Again, I'm looking for the completion point. Now for sub minuet wave 5, minuet wave 5, and minute wave A of minor wave 4. As we continue to slide lower, it continues to build a stronger case for this window, this box, this rectangle, which represents the previous fourth wave, the price territory, and expectations of how will this get down into here. When we were sitting up here, it didn't look like, yeah, maybe, maybe not. And now we're even closer. That was 54.32. This is 53.96. We were within 40 points. So, and we were down 27.5. So again, and we were down more than that early. All right, over in the NASDAQ. NASDAQ continues to have the control over the S&P at the moment. And it, excuse me, it really kind of hit the skids. And of course, dragging everything down with it. But let's go take a look. There's the culprit. Meta, which they tried again to push up this morning and then only to get their heads cracked. Microsoft, they tried to push up this morning, really got their heads cracked. There was enough. And even Apple, they try and then it just kind of fails and then it just gets hit. And that again is what kind of happens because of the way things are trading. Now, let's take a look. I've kind of had to do the same thing in here, where I went inside and I decided I got to break this down. Let me come up because there's the third. So in this one, it's more, I still could almost push it to there if I had to. The low this afternoon was 18,941, and this low is 18,883. So we got about 50 points. So that's why I'm going to label this 3, label that 4, and look for that. But I'm just putting back on, I can have one additional. Let me just kind of go, drive myself crazy, right? And I got to pull it out because I have to go 1 to 4 because I think I'm not sure what I had left over. But let me just go out and pull that in and take a look at it. See if we got any matchup there. And so I'm just putting minuet wave 4 to minuet, minuet wave 1 to minuet wave 5. And we still have a 2.618, which is down here, 18,386. So I'm actually going to leave that up there on the basis that it could. How about that? Yeah, it could. So 1.618 is gone. So I'll take that off, and it's actually just the 2.618, and I'm going to mark it as such. So that's what we got, and that's connected with the minuet wave 5. So while we have these for sub minuet wave 5, and then we've got a little bit of a window right there. See, 18,386, 18,339, 2.618 for the sub minuet wave 5, and 2.618 for the minuet wave 5. Wow, too many M's. Okay, so we have, this again goes with the fourth wave, with the minor 4. and it's very topside, very topside. So again, once we start to break below 18,815, we're dropping into the box, into the rectangle. And so, but I'm looking for wave 5. I'm leaving that there because that's where the market closed. Not too unusual, a fib support level or resistance. And then I'm going to look for this. And a clean break there drops it real quick. And again, there's just not much in there. If we go over and have to look, it was rallies. If we go over between these two levels, it was this rally. It was just push, push, push. A couple of sells, but it was big, big rally. And now, so we got nothing to hang our hat on. A little bit, a little bit. You know, if it comes below here, we could say that it has a chance of getting to 18,700, 690. And then it goes quick down into here. All right, now back to that hourly chart. So we're still looking for the conclusion of, oh, I've got it all right there. I wish I could just kind of pick it all up and move it together, but I can't. And so that is the sub-minuet wave 5, the minuet wave 5, and the minute wave A of minor wave 4. So here as well, these are the anchor VWAP, and you could see this one just like getting smashed. And so that just produces, I think, more intensity as the need to sell increases. So bids evaporate and the demand gets great. And as we drop, tomorrow could even be, just as hairy. And to both sides, that's the other important thing I wanted to just bring up. This volatility, this speed in which the markets are moving is happening on both sides. The intensity of jumping back in, of buying, for whatever their reason is buying, they're buying a larger number. So either they're covering something or they're trying to, the market starts to move and they weren't finished getting out of the position. And the position now required that you buy, or they just bought a bunch of puts and the market flips and they need to hedge that. So, a lot of stuff could create it. But that adds to the whole momentum. So it's that momentum speed of like really going and the market moves a great deal. For example, from this morning being down over 300 to being up over 150 in, 1, 2, 3 hours. So good moves. So anyway, I have to allow for this tomorrow's expiration. And let me just double check to see what, if anything, we have coming out in terms of, I need to add it. Nope. In terms of data tomorrow. And we have the economic calendar, and Wednesday, Thursday, Friday, we have PCE. So at 8:30 a.m., we have personal income and spending. We have the PCE. And then at 10 a.m., we have consumer sentiment, the final. So PCE, pretty important considering that next Wednesday, we have the Fed. And from what you can read from just looking at the bond prices and yields, the market pretty much is 100% saying that we're going to get a cut. Now, I'm not sure because this is all based in September, that they're not thinking that, well, we're 100% certain we're going to get a cut in September at the September meeting versus at the August meeting. So, but the market is the market. So again, tomorrow's expiration, I believe, will be presenting its own opportunities. That's the way I want to leave this, because again, when we're getting into these periods as a day trader, even as a swing trader, you just have to really contain your trade. But there are a lot of trades to do. As a day trader, it's like, let me just say that I trade the NASDAQ. The NASDAQ within seconds is going to give you 150, 200, 250 bucks within seconds on a one lot. Again, we're talking that this moves $5 a tick, and the ticks are 25 cents. But it doesn't move in ticks, it moves in dollars. And these algorithms just come in and bid to grab stuff. And so, yeah, it moves. It moves quickly. So again, depending on how you trade and what you trade, the opportunities are there. To question and say that, well, oh, you're a day trader, so you're missing out, please. I'm not missing out on anything. I don't carry overnight risk, and I'm making a bundle. Trading, just trading. And a lot of it you can just get done in the first few minutes. So in the trade room that I have where I'm telling people, it's like, hey, if you make your goal, go do something else. Go enjoy your day. You reached your money goal for today. You prefer to keep the money because you're gonna use it for whatever your reasons are. If this is your job, then you need to earn money every day to pay the mortgage, to pay the food, the gas and electric, the car, et cetera, et cetera. So if you're making your daily goal, hallelujah, you become a professional trader. But then guess what? There's a lot of stuff that people will say, he's like, well, you're going to hang out, and you're going to try to make more, and they end up giving it back. So when you make your money, congratulations, great, go have a great day. And I'm telling you, I have people now, I live in the West Coast of the United States, so market opens at 6:30 a.m. I have people saying, I'm done, thank you very much, by 6:45, 7 o'clock, 7:30. Thank you, made my goal, see you tomorrow. So it is possible, and it's very lucrative. Anyway, I say all that because, as you all know, I'm looking to turn a little bit of a page here on how I present and getting more people to come in and trade. And so taking this analysis, the depth of the analysis, and putting it on Discord, or so for my trade room, which is on Discord. Anyway, I'm going to leave it that the NASDAQ and the S&P have a great chance that they're going to continue to follow through to the downside, but I'm still looking for the low for minute wave A, and then turn will produce a minute B wave. Again, because the A wave is 5 waves, I will not expect the B wave to exceed 50 to 62% retracement. Simple ABC up. Not looking for a flat, an ABC flat, because wave A was 5 waves. So that means that the whole ABC down that's going to form minor wave 4 will be a zigzag. That's going to help us get to the bottom of that rectangle. And I know I'm talking a lot right now, but see, we're looking at how do we get, we're up here, how do we get into there? It forms a zigzag, and we get there. The C wave promises to be similar to the A wave, but likely a little bit stronger. And I'm going to leave it at that. So tomorrow, Friday, expiration, we got the numbers. We know what we've got. Well, we know what's coming out. The market's going to be volatile. Trade smart. The next daily, Elliott Wave Daily, will be on Monday, July the 29th. And I will be doing a podcast over the weekend, which is just where I make my weekly update for the S&P and the NASDAQ. Have a great weekend, everybody.